Hello and welcome to this session in which we will discuss the concept of benchmarking. Benchmarking is a practice where you compare your business processes, your business matrices to some other company, usually the best companies in the industry, could be your competitor, or within your own organization, comparing one division, one section into the other. The good thing about benchmarking, it gives you more information about industry standard because you are looking at other companies. It gives you what are the best practices, how other companies are running their businesses. And there are two types of benchmarking as we just implied. There are external, it means looking at outsiders outside your organization, and obviously there are internal benchmarking. In this session, we would look at both advantages, disadvantages, and challenges in both benchmarking. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Starting with external benchmarking. What's the purpose? What are the purposes of external benchmarking? Well, you could compare your performance to other companies. It helps the organization understand how they stack up. How well are they doing against others in the industry? And what would happen when that happens? It's going to encourage you. It's going to prompt you to do what? To strive to improve, trying to even surpass your competitor. So that's a good thing. It shows you where do you stack. Strategic insight. By looking outside your company, what you are doing is you are gaining strategic insight that's going to give you information about how others are planning and positioning themselves. And as a result, what you do is you adjust and you plan and you position yourself for strategic purposes. And also, the most important thing is you're going to improve your processes. Learn about more efficient and effective processes, how to do things better, how to do things with less resources, shorter period of time. That could lead to significant operational efficiency, and that's really what you are trying to do. There are several types of external benchmarking. You can do what's called competitive benchmarking, directly compare yourself to other business processes and other performance matrices that are the strongest in the industry. Who are your strongest competitor? Compare yourself to them. You could look at industry benchmark. Here you're looking at the average. And you want to perform above average. And we'll look at some simple examples shortly. Whether, this is you're comparing yourself to the industry, not to a direct competition. So that's another way. Or you could look at the best-in-class benchmarking. Compare an organization performance against the companies who are recognized as leaders in any industry. So you would look at the leader in this industry, and you would try to compare yourself to them, not just your own or your own competitor. So you want to look at who's the best. I want to try to imitate the best. What are the steps in external benchmarking? First, you have to plan. Define what will be benchmarked. What are you trying to benchmark? And which companies will be targeted for comparison? What am I trying to do? Am I trying to improve my customer service, my processes, the number of defects? What am I trying to benchmark? Then I have to collect data. Then I have to analyze, understand the performance gap. How well am I doing against the others? And identify factoring what's leading to that difference. What's leading to the difference between how well or not well I am doing to other competitors? Integration. Now I have to communicate the results. What did I learn in this benchmarking analysis to relevant stakeholders? Usually the relevant stakeholders are people who are working within the company, people who are in charge of whatever we are benchmarking. So if it's a customer service, if it's operation, if it's customer service, people who are working in customer service. If it's operation, the manufacturing people. And how can they apply what we just learned? You have to take action, develop and implement specific action. You learn, you integrate it. Let's act upon it to improve processes based on the benchmark data. Also, you would review, monitor the impact, see, did we really improve over time as a result of this process? There are challenges to external benchmarking. And I'm pretty sure you guessed the first challenge is data gathering. Remember, we have to gather data. It might be challenging to compare, it will be challenging to obtain detailed and comparable data from external entities. Now, you could look at their financial statements if they are publicly traded companies, income statement, balance sheet, the annual report, but that's not going to give you operational details. You want more specific information. Also, the data that you obtain, it must be relevant to what you are doing. There must be a careful consideration to make sure that the comparison are relevant. Relevant means it's whatever you are trying to do, whether it's operation, customer service, IT services, so on and so forth. Also, adaptation. It's not just about copying what they did. It's about how can you integrate, adapt those strategies into your own organization, because companies will have different culture. Companies will have different maturity level. They will have different experience, different management. It might be different than yours. So adoption of their practices might be challenging. There are a lot of benefit of external benchmarking. One is learning from others. It can be an excellent way to learn from success and failure of other companies. It drives innovation. You're learning from others. You are exposed to different ways of working that can spark different ideas, different innovation, different solution for the problems. It leads to adoption of new technologies and processes. And objective performance assessment. It provides an objective basis to measure performance and set goals. Now you are looking at something that's indeed objective, because why would the other company lie about their numbers? They're not trying. That's the numbers that they have. Therefore, you are comparing yourself to objective figures. Let's look at some examples from the real world. Simple examples. We're going to have more examples in different sessions, but like a retail industry might benchmark its sales per square foot against other retail chain to see how well it utilizes retail space compared to competitors. For example, one retail store wanted to know per square footage what's their sale. So the company collects the data and they find out that their own company, their sales is $500 per square foot per year. Company B, their competitor, is $550. And the industry is $600 per square footage. Well, we're not doing good at all. We can try to at least get the B first, see what B is doing, and if we can get the C, that's even better. Another example will be IT services within your company. You could provide, IT services could compare its average resolution for customer service ticket against their competitor. For example, Company A, which is our company, takes 4 hours to resolve an issue. Company B, it takes only 3 hours, which is Company B is a direct competitor, and Company C takes 2 hours. What does that mean? We need to improve. We need to learn from Company B, what are they doing, and even better, overall the industry is doing even better. So based on these results, we could look into how can we improve this? We could use automation, self-service option for customers. We can train our employees. So it just tells us something we need to do in order to reduce our service time, our resolution service time. Let's move on to internal benchmarking. Internal benchmarking is the practice of comparing performance matrices to business processes within the organization to identify best practices and improve efficiency. Well, this method looks internally. Look at different departments, different teams, different units, different territories within the same company rather than looking at competitors or industry standards. The goal here is same thing, identify the best practices within the company. What are they doing? What's one division doing the best, and let's try to copy that division. Promote standardization. If that division is doing good, doing well, their processes are working as the best, let's standardize this process against the whole organization. Also improve performance to leverage internal comparison to drive organizational change and performance improvement. What you do now, you'll tell this division that division B is doing better. Let's go ahead and imitate them and do better. A lot of advantages to this. Control over data. Now you're using your own data. You have control over the data and the quality of data, since you know what data you are working with. So it's relevant. You know exactly what it is. It's easier to compare because you are comparing within the same company. You're not looking at your competitor, different culture, different processes. It's your own company, same environment, supposed to be the same environment. And there is reduced resistance to sharing, lower resistance to sharing sensitive data and best practices, and it's remain internal. Because with external companies, they may not like to reveal certain data. Internally, you can get this data. And this is what we mean by control over data. Cost effectiveness, generally speaking, it's less expensive, less time consuming. You're generating the data from your own system. But there are challenges to this. Limited perspective. When you are comparing yourself to yourself, you may not provide the most, you are not looking at the most competitive. You may not be the most competitive. You are not looking at the most innovative. You may not provide the innovation or outside perspective that external benchmarking offers. Complacency risk. The organization might become complacent if it compares itself internally and it's not doing good, but the outside competition is vibrant, then there's a lot of complacency here because you keep saying, well, we're doing good internally. That's not good enough. Internal departmental competition. Here what's going to happen, it may foster a competitive environment that might discourage sharing of best practices. You remember that some of the positives of benchmarking, some of the challenges could be also the same. Some examples of internal benchmarking: comparing sales performance across various offices to identify successful sales strategies and try to standardize those sales strategies. You want to look at manufacturing cycle times across multiple plants to find the most efficient one and standardize production techniques in that one. Maybe assess the time taken to market new product in different divisions to optimize product development processes. Let's take a look at this multiple choice question from Farhat lecture. What is the potential disadvantage of internal benchmarking? So this is a disadvantage, not advantage. Okay, so we're going to see 3 advantages. It may not provide insight into industry-wide best practices. Well, is this true? Internal benchmarking may not provide. Yes, I would say this is true. This is a disadvantage. But let's take a look at the other ones. It can be more expensive than external benchmarking. No, it's usually less expensive because you're obtaining the data internally. It's limited to financial performance comparison. It doesn't have to be financial performance. You can compare non-financial performances, like time to service a client. It requires disclosure of confidential data to competitor. No, this is internal benchmarking. There's no data being revealed. So it may not provide insight into industry-wide best practices. Indeed, that's the advantage of comparing yourself to yourself. You're not seeing what's happening to the outside. So the answer is A. What should you do now? Go to Farhat Lectures, look at additional MCQs. That's going to help you master this topic. Whether you are studying for your CPA exam or some other certification, invest in yourself. Good luck, study hard, and of course, stay safe.